Good morning, traders. Good afternoon, good evening, and good night from wherever you're watching us from. This is Shasta FX. Uh, Today we'll be talking about how to spot a profitable trade in your synthetic trading. How to spot a profitable trade in your synthetic trading, be it Deriv or Kwakol. Remember that this channel focus on synthetic. 90% of our videos or whatever this channel is made up of is on synthetic trading. Without wasting much of our time, we're going down to what we'll have for the day. Let's dive into the charts. When looking at this, you can see you can use your eye to spot this trend line. You can spot this trend line. Now, what makes a trend line valid is when it's able to connect at least two troughs. If you can be able to connect at least to two troughs, that means it's a valid trend line. So looking at this is a valid trend line. So when you spot it, the next thing you need to go down is try to know if, and one thing you need to know is if a trend line breaks a wick, is still a valid trend line. If a trend line breaks a body of a candle, it's no longer a valid trend line. Please, let's know this. Let me repeat myself. If a trend line breaks a wick of a candle, it can be accepted as a valid trend line. But if it breaks the body of a candlestick, it is not a valid trend line. So looking at this here, this is a valid trend line no matter what. So the next one we are going to look into is the second one is chart patterns. So when we talk about chart patterns, this is where we now be talking about where we have our flag pattern, W pattern, head and shoulder pattern, cup pattern, triangular pattern, blah blah blah, wedge pattern, and the rest of them. So we have both, including the M pattern. So looking at this, we have about, since we have our first one is trend line, the second one is chart pattern. So when you are done drawing your trend line, there are some patterns you need to look out for to see if actually this thing is trade continuation or trade reversal. So looking at this now is trade reversal we are looking at not continuation, because when you look at trade reversal, that simply means the trade or the market is about to change. Traders in the markets, the buyers are, or the sellers are, maybe sellers are still in control of the market or buyers has taken over. So it is the trade reversal, the chart pattern, that will tell you if the trading is the trade or the market is about to change or not. So let's put it out and see. Now along the line we got, sorry, let me do this. Yeah, along the line we got some we were waiting. After it got to a certain place, we realized that this is our lower low. All of a sudden you stop making a lower low. That is where you need to mark where it stop having a lower low. Now looking at this now, it has automatically formed a W pattern. First of all, we saw the first leg. Let me clean this. We saw the first leg here. Let's circle it. This is how to spot it. It's 1, 2, 3. We saw the first leg. Now whenever you see a first leg of a trade or of a chart pattern, always try as much as possible to mark it out. So what do I mean by that? This is what I mean. You get to your tools. Looking at this, we have our first here. Looking at this, let me circle it again for us to see it very clearly. This is first one, second one, and third one. So now looking at this now, we want to mark. Looking at this now, we want to figure out we have marked the first one. This is the first line. Now we need to look out for the second line, which is the second low. Now what we need to do is, let me remove this for now. Let me remove this for now, please. Now let's get second one, which is here. Now let's look for the third one, third line, which is here. So we are looking for when a particular when the market or the chart, or when the market will get down to the line before taking off. That's what we are looking for, the chart pattern. Now looking at this, now we see here, this is 4 hours. Let me zoom it in. Okay, if you can see it clearly, sorry, let me take it down. If you can see it clearly, you see here we saw something here. We saw this first leg here, it went up, came down, it broke. It's not valid. It's still continuing. The trend is still continuing. It came up again. We mark the second one. It formed, did as if it formed an M pattern. It still went down. It's nothing. So now I'm looking at this. Now you see that all this trend line is connecting to this truss, is connecting to it. So now, without wasting much of our time, you go down a little bit. We all saw that at the third. Always know that when you are trading a synthetic indices, a trading pair, sorry, synthetic pair. When you are trading a synthetic pair, always know that after the first lower low, second lower low, the third one, from third one, start looking out for chart patterns. I will show you in our previous videos or in our next video how it repeats, or how it always occur frequently. Looking at this, we have the first one, which is at the third one. You have the first leg here, it came down on the same line. It came down. We are not respecting this week, because this week is a fake out. So when we saw this, it went up again. It broke the trend line. Remember that before it was just a week that was pointing it up, a week. But this time around, it uses its body to break this trend line here. That is where we know that officially, if you didn't enter from the bottom, where we have double bottom, now after the trend line must have broken the chart, this is where you are going to enter the next you are going to enter your trade. But how do we get? You can't just enter a trade in your 4 hours time frame. What you need to do is you need to wait. Let's go down to, let me remove this. Let me zoom in. So now when this market broke out of here, what you need to do is you need to look out for candlestick formation. So now we need to, now that the trend line has, now that we have formed a double bottom, which is the chart pattern. Now we are now looking at the third one for that we have for today, which is let's go back to our notebook, which is candlestick formation. So by the time we have, this is candlestick formation. Looking at this now, let me rotate it again. Candlestick formation. Looking at this, we see that we have something. Looking at this now, let's go back. We have what we call, this is, let me spot it out. Let me zoom in. Okay, looking at this now, we have a bullish engulfing that engulfed this. This is bullish engulfing, and after it, the next candlestick went up, using the body to broke the trend line. So looking at this now, this is a valid trend line. This is a valid reversal pattern, which is W. We always know W as a reversal pattern. Let's have this. We always know W to be a reversal pattern. So coming down to a lower time frame, let's say 1 hour time frame, 1 hour time frame, you see 1 hour time frame, this is it. Let me zoom out, please. Rather, let me zoom in. So now looking at this this is 1 hour time frame. So immediately we saw a double bottom here. It took off, it went off, broke the trend line. Now we need to wait for a retest. For those that want to enter the market immediately, you have a big chances of the trade going back to hit your stop loss. But if you can wait for a retest, you are good to go. But if you can't wait for a retest, immediately it breaks out with a solid bullish candlestick. What you need to do, you need to enter immediately. This is synthetic, not forex. This is synthetic. I have been trading this for some years now, and I've been able to figure this out. So what you need to do is immediately it breaks out, you just need to start, enter a trade. Come down to your 15 minutes time frame. Let me highlight this. Let me highlight this with a box. Immediately it broke out here. This is it. So let's go down to our 15 minutes time frame and see our trade entry, where we can enter a trade. Let's see. Okay, good. So you see, immediately it broke out. The market even retested on the same trend, on the same zone. Sorry. Let's go back, please. So the market even retested, which is here, retested and started before moving up. So if you missed it here, definitely you are not going to miss it when it will be retesting, which is here, and it retested here. It retested here. If we are to move this from here, you see that we have a zone. This is consolidating zone. So you can at the same time enter here or here, anywhere you like to enter. If you can hold the position, enter here and use a ratio of 1:2, and you are good to go. So without wasting much of our time, I think I won't want to make this video too lengthy, but let's go back to have a review of it. Let's go back and have a review of this. So now looking at this, we say we enter this a W pattern. So anytime you see a W pattern, know that it's going, this is a trend line. Anytime the line touches, let me remove this. Anytime the time touches the trough or touches anytime the chart touches the trend line, you know that it's going to go down. You can enter your tools and measure it, take it from there. Now this is the downside of it. Whenever it touches the down, definitely forms a pattern, a chart pattern, you are good to go. And while forming a chart pattern, always look out for the candlestick formation. Always look out for the candlestick formation. Look out for the candlestick formation. Here is it. After this fake out here, which is with the wick, we're able to see some bullish momentum. So here is it, and here we spotted out what is it called here? We spotted out our consolidating markets, where it consolidated to some extent before taking off. So now, and what you need to know about consolidation is it can never consolidate after consolidating and still come down. It cannot. What you just need to do is always prepare your mind that after the consolidation it will still move up. So what you just need to do is to get ready with your tools and get ready on the chart and start looking out for the next move. This is 1 hour time frame. So if you are to go back to 15 minutes time frame, let me zoom in. If you go down to 15 minutes time frame, you see it. After a while, it moves up. That's how it went up. So you can catch more than 1,000 pips here. If you entered it on time, you can more than 200 pips. More than 200 pips. Let me not exaggerate much. More than 200 pips is a short. So I think with this, we have been able to. Okay, let me take one other example before we call it a day. Before we end this video, let me go back to 4 hours time frame. This first one we did. So let's spot another. Okay, After this, for those that doesn't like using higher time frame to analyze market, you are missing a lot. Okay, looking at this, we see another pattern, continuation pattern. This is a continuation pattern here, 4 hours time frame. Look at this, look at this, look at this. So now, using the same what I have already explained earlier, we are going to use our trend line to figure it out using what we have already discussed earlier. So, and what that means is we are going to use our trend line first. You connect it. Let's see. Connect it from the first one, second one, and the third one. This is it. Let me reduce the length. Yes, from here to here. Sorry. Let me remove this. Here is it. So now looking at this, we have a flag pattern. This is a flag pattern. So let me remove this. We have a flag pattern of which indicates that definitely is going to move down. So if you are in this trade, remember that I told you after the third touches, after the third touch, start looking out for reversal. Remember that I said on the third touch, after the third touch, start looking out for your entries. After the third touch, start looking out for your entries. What do I mean by that? This is what I mean. After the first where you start drawing your trend line, after it, you start counting your third touch from the next weak point on the same trend line zone, which is 1, 2, 3. So after it broke out with the body. It broke out. Let me highlight it. It broke out with a body and retested. So upon this retesting, this is where we go long. Sorry, this is where we go short. Upon this retesting, this is where we go short. So bringing this down to 1 hour time frame. Bringing it down to a 1 hour time frame. This is it. So it retested. How do we know that it is time to enter? After this is the first retesting, don't enter. Why I say don't enter is we didn't see any clear reversal this thing trend here. We didn't see it. Instead, it formed something like W. And remember that this is not where we are anticipating that the market will go. So what you need to do is you need to wait and see a clear reversal, not actually a reversal, a continuation pattern, which is M, not W. W is a reversal pattern, while continuation pattern is M. So now looking at this now, we saw it here. We saw it here. This is M. So immediately you saw the first leg, you mark it. Second leg, you are good to go. Once you get there on the same trend line zone, you are good to go. You take it down. You milk the market. You make nonsense out of the market. So this is, you make massive profit from it. So this is how it works. I think I will end this video here. Please, if you have any question, you have any suggestion, you have any contribution, please leave it on the comment box. I'll be there to answer you. Feel free to ask me any question. Remember that this strategies is being used in all pairs, in all synthetic pairs, in all synthetic pairs, in all synthetic pairs. So feel free, and this is a W pattern. Feel free to ask your question in the comment box. Please kindly subscribe, like, and share. Don't forget to turn on the notification button so that whenever I drop a new video, a new content like this, you will always be among the first people to watch it. Thank you.